A small leap to Bitcoin, which has a future expected value higher than any other asset class in terms of risk reward. Sure, it goes up and down 50, 60, 70% down, but its upside is 10, 50, 100x.
Raoul Pal is known globally as an economist, investment strategist, and a publisher. He is the founder and CEO of the Global Macro Investor, which is a macroeconomic and investment strategy research service. Raoul Pal has made waves in the cryptocurrency community and is a favorite of the crypto faithful. He publicly disclosed his incremental investment of more than 50% of his portfolio only in Bitcoin. Before founding Global Macro Investor, Pal earned his money climbing the corporate ladder in various positions in the financial sector. He was associated with Goldman Sachs as the head of European hedge fund sales. In total, he has over 44 years of experience in the finance industry. In 2014, Pal co-founded Raoul Vision. Raoul Vision is a financial media platform aimed at massively democratizing financial research. Pal says the company helps investors better understand the complex world of finance, business, and the global economy with Raoul in-depth analysis from Raoul experts. Of course, Pal is an investor whose advice is followed by a lot of people globally. He regularly provides his forecasts related to the crypto market. Recently, he was quoted as saying that the crypto market has found its bottom and that any new upside momentum is likely. In this video, we analyze this warning from Raoul Pal and try to understand its implications on the market. Macro guru Raoul Pal says the crypto market is nearing its bottom amid a downturn that's seen Bitcoin fall below $25,000. The Raoul Vision CEO made these comments during an interview. His outlook comes at a time when Bitcoin and the rest of the crypto market is looking to bounce back after a bout of fresh lows over the past few days. Bitcoin traded at lows of $30,000 this week. However, it has recovered some of the losses and is currently hovering at around $31,200. Bitcoin, along with other cryptos such as Ethereum, XRP, and Solana, have all increased by a small margin. But according to Raoul Pal, crypto hasn't made a new low yet. Pal says the crypto market has been hit by various macro developments in the past several months. However, no new low has been made since the last bottom in 2021 despite several likely negative triggers. It's a scenario that supports the resilience of the crypto market but could also point to a low already being closed. But of course, no one can predict the market with certainty. Pal says that the balance of probabilities is that crypto made the low last year and then retested the low this year, and the low is just around the corner once again. He believes that crypto has seen everything that might have helped to push prices to a new low. That hasn't happened so far, but it might be closer than you imagine. According to Pal, the crypto market has seen it all, including a war, 8.5% inflation, and even the Fed raising interest rates. Even after so much of a commotion in the crypto market, it didn't make a new low. That is usually a signal the market has found its bottom. As the prices of crypto assets continue to plummet, the former Goldman Sachs executive tells his 938,900 Twitter followers why he thinks the market could be on the verge of recovery. On fresh catalysts for crypto prices, Pal thinks a slowdown in economic growth would be top of the list. This is a scenario that will trigger buying pressure in assets that tend to outperform in low-growth environments. He says that a change in the economic landscape could soon see people fearing inflation less and start fearing growth more. According to Pal, this is when long-duration assets, like crypto, will begin to outperform. If we look at Bitcoin's 4-year cycle, the downward spiral is likely overdue to the market size today, as compared to during the early years. Still, this cycle could have an impact, but that could be on a smaller scale as further adoption reduces the wild volatility. Right now, crypto is in full panic mode. March 2020 was very similar in levels of fear, anger, vitriol, shock, and panic. June 2021 was less. Pal says that recessions and bear markets might seem difficult and scary now, but they also provide investors with huge opportunities. He also has a piece of advice for the investors. Keep calm and carry on. Stick to your framework. Test your hypothesis and keep an open mind. filter out the noise and just focus. Opportunity comes out of crisis. Pal also spoke about looking to add to Ethereum for getting wildly bullish bonds and of averaging into high beta growth. Pal's comments come as $746.27 million worth of trader positions in crypto assets were wiped out in the last week. Raoul Pal believes that the current bear condition of the crypto market will end only after the Fed loosens its hawkish monetary policy by halting interest rate hikes. According to Pal's predictions, it could happen in the next few months. The Fed is unlikely to raise interest rates as far and as quickly as one might expect. My guess is they might stop raising interest rates in the summer, and that's it. Pal sees the combination of high interest rates and fear of an impending recession as the main macro factor causing the current crypto market downturn. Retail investors' incomes don't rise as much as prices, so they lose discretionary income. So people can only spend less dollars on average and can engage less, he said. According to Pal, the market bottom has not been reached yet, but a mass liquidation phase involving crypto assets is coming soon. Crypto could see a liquidation spike at some point if we continue looking at it in terms of equities. In the end, it will be the final capitulation of the market. At that point, the Fed is likely to loosen its monetary policy, which will allow some liquidity to flow into the financial markets. This will be vital to trigger the next crypto rally. We're going to see a bond rally, a crypto rally, maybe some tech stocks rally, Pal said. Anyways, crypto assets are moving in tandem with traditional assets these days. This phenomena began after hedge funds and wealth management firms entered into the crypto space. This fact, combined with the central bank's aggressive monetary policy, has weighed on both stocks and cryptos alike. So, as the stock staggered after inflation hit at 8.3%, which was the highest in 4 decades, cryptos also took a beating. Another reason for the crypto touching lows is an unexpected decoupling of Terra USD. Terra USD is a stablecoin which operates almost like a central bank, but for cryptos. It is generally supposed to mirror the value of the US dollar. However, it went down to $0.54 recently. Investors have turned to stable coins in these times of extreme volatility, but because these digital assets have also struggled to maintain a stable value, the investors have bolted the industry hugely. This fallout has also sparked fears of a ripple effect, severely impacting many stablecoins and even the broader crypto market. However, according to historical data, Bitcoin and crypto markets have been known to recover from such massive sell-offs in challenging periods. We saw Bitcoin recover well from a 30% price tumble in 2021 after regulatory crackdowns in China. Still, amidst all the uncertainty, there are a few unanswered questions. Have the current prices bottomed out? When will the markets recover? Is there more pain in store for investors? When will the crypto bear market end? The bear run in the crypto market won't end until the Fed loosens its monetary policy. Until then, Pal says that the liquidation in the crypto market would continue. More so if it continues in the equity market as well. And if the situation gets worse, the Fed will surely have to intervene and ease up its tight grasp on the economy. It must allow some liquidity to flow into financial markets, which may spark the next crypto rally. Ever since several family offices and hedge fund houses have made their way to the crypto market, it has begun to be affected by macroeconomic factors such as monetary policy, just like its equity cousins. And unlike traders who have been pulling up Bitcoin's prices since all these years, these new traders consider Bitcoin as just another high-risk, high-reward investment. Most of such investors are reportedly under pressure to secure high returns for their clients. So, obviously, when such people lose faith in the crypto system, the entire ecosystem suffers. However, amidst the sell-off, dominance is still a crucial metric to look at. And Bitcoin's dominance index is at a 6-month high. The dominance index measures Bitcoin's market share against the several altcoins. The dominance index has climbed to nearly 4 to 5%, which suggests that investors are preferring Bitcoin over other digital assets. It's a pretty good sign in these particularly dark times. Moreover, most cryptocurrencies have also shown double-digit price hikes in recent times, just after the lows. This shows the potential recovery of the crypto market, giving investors some reason to keep their faith. Raoul Pal's views, however, must be treated as a warning. If the crypto market is bottoming out, it can be the best time to invest. So pay heed to the advice of the hugely experienced macro investor. Pal says that despite the fear, uncertainty, and doubt regarding crypto investment, volatility is also the reason why the market has the potential for massive gains. So listen closely. What do you think about the advice? Tell us about it in the comment section. Also, press the like button if you like the information and tap share to share this video with your fellow investors. Do not forget to subscribe to our channel for more such videos. We will be back soon.